So what are we going to talk about in this 60-second video? Well, we're going to ask Filbert's question, is the ETF rebalancing in the last hour, and how can this affect GME? We've been hearing news that ETFs have been rebalancing ever since quadruple witching day, right? This is the 3-month-long period where we are normally seeing these ETFs rebalance. First, what is an ETF? Second, how can an ETF rebalancing change the outlook for GME and AMC, respectively? And exactly how are the hedge funds either running scared or expecting this? And if you guys watch until the end, you're going to learn what it means to smash that like button early, as well as thank Mr. Whiteboard in the comment section below. So first thing is, this is an ETF, right? Let's say that an individual share looks like this. Well, right now, buying a share, maybe this is like a cherry. This is a cherry. And maybe you're not sure if you like cherries. You're not sure if the risk profile for cherry works for you. That's why an ETF is like a fruit basket. It's going to be a piece of a cherry, and maybe there's going to be like grapes here, right? And then it's going to be banana. The banana here is GME. And so this ETF in particular is XRT, something that we've been covering for a while. So XRT was scheduled to rebalance in quadruple witching day, right? And it doesn't happen immediately. It ends up looking at how much of this fruit basket, right? This essentially a hedged bet over many different types of stocks. Does it still have an even distribution of these fruits, or is 80% of this banana? Right now, XRT, before the rebalancing, had about 20% GME, right? This is the GME banana here. So that means that it is no longer playing the right game. This is not supposed to be 20% banana, maybe about 1% per stock maximum, right? So that means that they have to get rid of GME. So normally this would be bad. Turning 20% of this ETF into just 1% GME means that you have to sell a lot of GME. However, this is likely going to be finding out that half or a good portion of these shares here are actually synthetic. So we talked about counterfeiting shorts, we talked about naked short selling, but one of the ways that a company can short GME without shorting it is by shorting the ETF, the fruit basket that is outside it. So they go and they short this stock by selling it either nakedly or otherwise, and then they now have a big obligation to pay back these synthetic shares that don't yet exist. So in order for XRT to get rid of this, first, the hedge funds or the short whales need to first cover these shorts. So we would likely see the price of GME start to rise when the XRT or any other ETF that the hedge funds have been shorting first. This is the price of GME. It likely is going to rise when the rebalancing first starts, but then that sell-off, because ultimately this does have to be a sell-off for the XRT to rebalance, likely we are going to see some major turbulence up ahead. So if that explanation made sense to you, or if you still have a question, drop a comment down below, and we will see you in the money. Thanks for watching.